Welcome to another episode of Dr. Brooke on the Block. It's time to grab a seat, buckle up, and take a ride with me through the wild, wild west of the Web3 universe, where we're going to learn all about coins and tokens, NFTs and contracts, digital real estate and the metaverse, and so much more. There's a lot to get through on the block, but I am here to pave the way and help you avoid those nasty pitfalls and rug pulls so you don't get hurt. I'm going to also introduce you to some interesting characters along the way. Are you ready? Your ride starts now. What's up? What's up? Welcome to another epic ride in the wild, wild west of Web3. I am Dr. Brooke, the cryptopractor, joined by my co-pilot today, Pete Harrigan. He is the CEO and co-founder of Gray Swan Digital, which developed the technology behind outcome trading. Outcome trading was developed to transform the financial risks into opportunities for return, diversification, and social benefit. Welcome to the show, Pete. How are you?
I'm doing great. Thanks very much. I think what we would add to our description of the platform now is essentially we're trying to do what Apple did to the computer many years ago. We're trying to make it easier for people to use, and we like to say if you can move a mouse, you can create and speculate on the price of an asset. So that's all you really have to know to be able to create your own derivative.
I love that. That's amazing. And we'll get more into that as the show goes on.
Mm-hmm.
But first and foremost, I love asking my guests this question. My listeners love hearing it. Everybody's journey into this new world in which we're embarking on is very different. It is, a new world that's, a little over a decade or, old at this point. And I'm curious how you entered the Web3 or the incoming Web3 space. What's your story, Pete?
Yeah, sure. Well, my background is primarily in capital markets. I traded currency options in Chicago, and I traded currencies at Bank of America for a long time ago, and then did equity options in San Francisco. So I've been in the derivative space for a really long time, and I'd actually been involved in a startup that was called Sentient Technologies in the sort of mid 2000s. And when I left there, sort of first time having I guess semi-successful exit, it's nice when they ask you to leave and they say here's a check rather than just then just get out, right? So
right, that's amazing.
Yeah, so I was in a position where I could start exploring things. I started going to ethereum meetups and stuff in 2014 down in Silicon Valley, and meeting some people and learning what was going on. Was lucky enough to get in on the ethereum pre-sale, which was I was kind of like walking down the street and tripping and falling face first into a winning lottery ticket. I mean, there was not a tremendous amount of skill involved in that. It was
right.
Just, but it was good to go and start learning about that. And as time passed and learned more about the industry, mostly kind of came in doing trading. But I don't think the world needs another trader. I don't think that's like the main thing we can contribute. But I did run into my partner Steven Hertzberg at those meetups, and a few years ago we sort of were talking about what we could do, and we settled on this venture that we're working on right now, which again is a combination of like a UI where someone can use like a really easy drag and drop to create their own derivative and their own trade. And we thought, well, we have the knowledge. He's been working in like machine human interfaces, and I've been working in the capital markets and derivatives industry. We could come up with something interesting and something new.
That's incredible. So to ask you another question, for what you guys are creating, the UI and creating the derivatives that people can trade, what is that all through the blockchain, or are you guys doing it also with traditional financial market or traditional financial derivatives?
Right. So we are not using any traditional financial derivatives. I think,
awesome.
So I think what there are parts of it that are similar to other parts, but essentially we kind of just tore it down and thought, okay, we have a whole bunch of new technologies here. We don't have
Yeah.
to try to recreate the exact same things, right? I mean,
Mhm.
the one I always think of is years ago when I was trading on the floor in Chicago, and the first like bubble wave that we saw was the .com one back in like
Mhm.
99 and 2000. So
Mhm.
I'm sitting on the trading floor in the options pit, and I don't know if you're probably not old enough to remember this, but there was a company called KTEL, and they used to advertise these records on like the UHF channels and stuff, and it's like,
Mm-mm.
oh, the songs of the 60s on an album or whatever, and you dial a number and you give them a credit card and you'd buy it. And KTEL said, no, we're going to be KTEL.com. So this was a period when very few people had like Wi-Fi or broadband. I mean, you
Right.
literally had dial-up, right? So
Yes.
you went from calling them on the phone to plugging the phone into your computer into the phone,
Yes.
and the stock went from $10 to $40 overnight. And all they were doing is recreating what they did, but on the internet. And I feel
Yes.
like we're seeing a lot of that too, where people are like, let's create the traditional financial system on blockchain. Let's create traditional puts and calls and
Yeah.
futures and things on blockchain.
Yeah.
And we don't think that's what you can do with it. What we think is interesting is thinking, what can we create now from scratch and make something that's not just again, not just a traditional instrument on the blockchain, but an entirely new instrument, an entirely new way of approaching this.
I love it. So then can you go into further detail on how option trading works, like how the software works? Does somebody have to have already existing trading knowledge in order to utilize it? Or can they utilize it, newbie getting in there, learning the beginning steps and then being able to be successful with it?
Right. So you have to be able to have a wallet, right? So you have to be able to have
Right.
like a MetaMask or one of these
Yeah.
kinds of things. So you have to, if you've got a Web3 or DeFi wallet, then that is a useful step. But
Mhm.
essentially, what it is you come in and there's a little XY coordinate graph. It's like a like a price chart that we're used to, but it's kind of turned on its side. So along the bottom, you'll see, here, like let's say it's Bitcoin, here it's 20. Well, it was 21,000 the other day. Now it's not
Right.
anymore. But
Yeah. Yeah.
going to the right, the price going up; going to the left, price going down. And
Mhm.
then on the y-axis, you're seeing how much you want to make or lose. And so you could just drag the little circle and a line, and you just drag it to where you want it to go. You say, "This is the outcome I'm looking for." So
Mhm.
you say, for instance, you own Bitcoin and you want to protect yourself from a decline. You might draw a little line that says, if the price goes down to 15,000, I want to make $8,000.
Mhm.
And then as you do this, it's automatically updating the price. How much collateral you need to support this trade? What's the most you could make, the most you could lose? And then you might say, well, okay, I'm gonna, what I've created is an options position, and then I'm going to lose money if the market doesn't move. So I'll drag the line down a little bit on the right so I can lose a little money if the price goes up because I'm already making it because I have Bitcoin. You created now a hedge that fits exactly what you want, and
Yeah.
the system is telling you this is how much money you need to support that trade, how much you could make or lose if the market doesn't move, and you can essentially create any crazy trade you want. You can speculate on the price going up. You can hedge against going down. You can create a trade where you make money if it goes either direction, but you lose if it doesn't move. Or you can make something that's the opposite. You lose in either direction, but if it doesn't move, you make a little money. You can create anything you want without any knowledge of, if you spent zero time trading options,
Yeah.
you can use this system.
I'm like smiling as you're talking. I'm like, that is so incredible how like multifaceted, you can lose if it doesn't move, you can go whatever direction the market, it's almost like you're creating what you want that trade or that stuff to look like.
Right.
Essentially, you're crafting it, customizing it for yourself. And that's a beautiful thing. My question is, so you're creating this customization trade,
Mm-hmm.
let's call it that. How then is it executed? Do you have a platform? Like, is it
Right.
executed through your platform, and so you guys are taking on some of the margin trading and giving the loans out to people that are doing those kind of things? Or is it done, are you partnered through a different platform that's actually moving that around.
Right. So in the first incarnation of this, there is an automated market maker and it
Okay.
prices. So what's actually happening behind the scenes, and you don't need to know any of this, but behind the scenes, we're actually breaking the little curve that you created into a group of small little fungible objects. And the number of those objects at each little point is what actually creates the pricing. So this is then being sent through the back end to an AMM, which will see this. It will come up with a theoretical pricing for each little piece and spit back like one price to you. So you draw the curve and you say, I'm going to make 10,000 if it goes here. I'm going to lose 5,000 if it goes here. And the system says, look, you need $4,000 in collateral to do this trade. You don't need to know any of those details. Again, there's no margin. Everything that happens is fully collateralized by a combination of the user and the automated market maker. And so this is why we call it, the reason we ended up with the name outcome trading is what you're doing is you're actually trading an outcome. You're not trading an instrument. You've created that outcome that you want. If the market goes here, I want this. If it goes here, I want that. You design that outcome and then you're locking it in. So once you do the trade, you never have to worry about a margin call or a liquidation or anything like that, because this is a bounded but collateralized trade, so that there isn't any situation where you see this so often, right? With look at recently what happened in Bitcoin. We had the price drop down to like 17.5. There are probably a lot of people who thought, I want to buy this at 20. This is too low. And then if you're leveraged or something like that, you can easily get liquidated. And then it comes right back. So this is something, I've been in trading for 30 plus years. And it's a very common thing, right? You get liquidated, you get knocked out. And then a month later you look and you were right. So you were right on the trade, but you lost money, which is absolutely no fun. And that is one of the things we're trying to prevent. So, if you're wrong, you bet the market's going to go down, it goes up. I'm sorry, you're still going to lose money. We can't prevent that, but we can keep you from having any of these kind of liquidations. One of the things I'm often following on Twitter is, I don't know if you've ever seen this one, is BX Rect. It's somebody who follows the BitMEX market. And every time someone is liquidated, their margin is liquidated, they tweet. So they've been around a few years and they've had 237,700 tweets, because that's how many times people have been liquidated. So you think, you see something on YouTube and so it's like, here's how I turned $1,000 into $20,000 or whatever. And I'm sure there are people who've done that. But for everyone who's had that experience of turning a small amount of money into a large amount, there are probably 1,000 people who've turned a small amount of money into zero money, right? Because that margin process is very dangerous, and you have a lot of people who don't. I don't want to say they don't know what they're doing, but it doesn't really matter if you know what you're doing or not. If you're in a volatile market trading on margin, it's dangerous, and you can get stopped out. And so this is one of the things we're trying to get rid of. In addition to the fact that you don't need to know what you're doing, you don't have to know anything going in. It's very visual. As you draw the curve, you're seeing that. This is how our brains work, right? We're visual creatures. You can see the line, you can see exactly what you can make or lose, but also you don't have to worry about being hit on liquidated on your margin.
Well, that's great. So then what is it being when you say collateralized, what is it being collateralized? What is it being collateralized with? So if I'm creating that and I'm saying I want to make this much money and it's collateralized, oh my gosh. Sorry, Pete, you go on.
It's a lot of syllables. That's a lot of syllables in that word. Yeah.
Jeez.
Yeah. Yeah. No, it's nice because you said it and then I don't have to try to pronounce it. No, what's actually happening is the money moves out of the AMM or the user, and the user. So when you say, I want to make $10,000 and we say, well, it's going to cost you $2,000 in collateral. You're going to move that money into what we call a matched collateral wallet. And then the AMM is going to move a matching amount in or a complementary amount in, such that the actual outcome of that $10,000 win is sitting in that wallet. And it's not going to move from that wallet unless one of two things happen. One, you decide to trade out. You say, okay, it's gone my way. I want to trade out of this trade. That's fine. You can exit your trade.
Can I jump in really quick?
Yeah, go for it.
If you're saying that I want to make $10,000, can I jump out of the trade with option trading? Can I jump out of the trade like when it hits, like, let's say $6,000?
Right. You can exit the trade at any time. And so one of the things on our platform is you can go in and see your position, and there's a little button that says, I want to create a curve that's the exact opposite of my position, which would allow me to exit the entire position. And so at that point, you could say, like, you're losing a little, you're making a little, you want to get out. Fine. You click that and you exit, you trade again with the AMM. In this case, what would happen is that AMM, you'd be releasing not just your collateral because you're exiting, you're also releasing the AMM's collateral because they no longer need to support your trade. The other thing that can happen is you can wait till expiration. So let's say you're trading something that expires September 15th. When you get to September 15th, the system goes through and says, let's see, on this little tiny fungible unit, you made money. On this one, you made money. Oh, and that one you lost. And it just adds it up so that the curve you drew is actually, you could go, okay, where on that curve are we at that date? And this is the amount you said you were going to make or lose. And that is exactly what happens. So the only way that money comes out of that wallet is either you exit or you just wait till maturity.
That's fascinating. That is really fascinating. So the other thing that you talk about too with option trading or outcome trading, is having the protection against these high volatile markets. And for those of you, or for those of us who have been in this space, even, like what is the terminology or the statement that I hear sometimes? It's like 2 weeks in the Web3 world is like, 2 decades. It's because it's moving so quickly, things are shifting, we're all learning as we move and we kind of take these steps. But one of the things that, you're talking about is the protection against these high volatile markets where, Bitcoin's going down and then it's shooting back up, or Ethereum's coming back down and then it's having these crazy, crazy gains over the last few weeks. There's so many things that could be happening. Does outcome trading have that protection for that amount of volatility and have like hedge protection against, and maybe this is my lack of knowledge entirely on the entire software, but like, we don't want another Celsius. We don't, the issue with what happened there, for those of you who may not be familiar, just go back and just search up, what happened to Celsius, and you'll get a bunch of Google articles on, and you can determine what happened there.
Yeah, we kind of looked at ourselves as kind of an the one I was thinking of was Luna, and we kind of think of ourselves
Luna,
right.
Yes.
We think of ourselves as kind of an anti-Luna, because that was something that, essentially the entire value of the stable coin was based on kind of an algorithm and an expectation of human behavior, right? Where, well, everyone's accepting that it's worth $1 so that means it's worth $1. And we put some incentives in. And I think those kinds of things, we've just seen, right? They can blow up. And, if you listen to anything, our original name for our company that we were developing under was Gray Swan, because we kind of liked what Nicholas or Nassim Taleb said, right? Which was essentially you get these black swan events, and anything that can kind of blow up, if you give it enough time, it will, right? And as you mentioned in crypto, Web3, all of this, the time is so compressed. What might take, what you'd expect, would happen to blow up in 1,000 years. 1,000 years. Okay. In crypto, that's 1.5 years or something like that. Right. So we look at this and say, let's not build it based on our understanding of human nature or trying to model the risk. I've come from trading in the conventional markets, and you're always modeling your risk. You're always looking at, what happens if we get a 5 standard deviation move or something like that. We wanted to make something where we didn't look at that. We're not looking at statistics or how many standard deviations. We're looking at, look, we lock the money up. If you want to have a very large payout, you're going to have to put out a larger amount of collateral, and the MM's going to have to put up a larger amount of collateral. That may end up being more costly because of the fact that you're using up the collateral of the automated market maker. and as you shape this, and as we develop and there's more money in that AMM, you might see more efficiency in the pricing, but in early days maybe less efficiency. But we just said, look, let's just lock it up so that it really doesn't matter. I mean, if all the blockchains in the world break down, and these systems stop working, that's another risk. That is in fact a risk factor for people. But I think I think we're past that. I think
Oh yeah.
I think we're
Yeah.
past that being a real risk. I mean,
Yeah.
I would always, consider it as a possibility, even if it's a remote possibility.
Yeah.
But essentially our view is, instead of having this where we think we can model the risk, it's like, no, we're going to lock up that amount of money. That does a couple of things for us. One of the things that allows us to be decentralized. It allows you to not care who your counterparty is. And it also allows you to not care whether or not we're good at modeling risk, because we wanted to just take that out altogether and just say, okay, we're just going to, we're going to lock up enough collateral to support this trade. And leverage is really popular. People really like things where you put a little tiny bit of money down and you can make a huge win. But the reality is, most of the time, that's not what's going to happen for people. And again, I go back to that, the Bitman or the BitMEX. I keep trying to merge Bitfinex and BitMEX, and they're completely different exchanges. The BitMEX Rect Twitter feed, where you look, and I mean, hundreds of thousands of times people being stopped out. And that's one platform. We know there are all kinds of other futures platforms. There's a CME, there's, Binance has got it. I mean, all these people have got these. And so, there's just thousands of times people are being wrecked and being knocked out of their position. So, we figured, okay, the return you're getting here we may not be promising the same kind of multiples that other people are, but you're actually going to get it. Your odds of actually having it realized are considerably higher.
Yeah, the getting the outcome that you're looking for.
Right, exactly.
What outcome trading, sounds to me like. I'm really fascinated. I'm going to definitely look into this a lot more for myself as well. You mentioned Bitcoin when you're giving the example a lot with outcome trading. Can this be also created using other blockchain or cryptocurrencies that are not their own layer one, but can you do it through other tokens that are maybe built on other blockchains?
Yeah. So all we really need is a good price feed. And then obviously we need to have liquidity in an automated market maker. So one of the things that we looked into, kind of had an earlier version of this we were looking at a few years ago. And so you get to see some of the things behind the scenes. So if you look at like the way the Chicago Mercantile Exchange creates these, the people who are creating the new index have to come up with a certain amount of collateral, gets locked up, and then the exchange has a certain amount of collateral, and then everyone who's putting their margin money in is putting up a certain amount, and you have this sort of waterfall system where if first we run through this money, then this money, then this money, before the exchange itself has to put up money. But what happens with that, having to have those large pools, it becomes very expensive to add a new index. And what we wanted to do is create something where it's really, really easy to create a new index. So with us, as long as we can have a reliable price feed and an index that people are willing to accept as the index they want their trade to settle on, we can create something very easily. So one of the things I'm excited about is the idea of doing like cross rates between currencies. Right now, you can look at like the Ethereum versus Bitcoin ratio. If you trade that on an exchange, what you're really doing is swapping out of your Ethereum into Bitcoin, or out of your Bitcoin into Ethereum. No, but what if you just want to bet on what's going to happen to that index? And so you want like a stable coin dollar payout in terms of what the outcome of that index will be in 3 months. We can do that quite easily as long as we have a price feed for that. One of the areas that we're looking at down the road, that's going to take some time to get to, is developing derivatives products in the real world, especially in the developing world. The World Bank's written on this. There's a huge need for this risk transfer among like agricultural products in Latin America, Africa, some of these developing countries. And it's very expensive to build a derivatives market, a centralized market. Whereas in this case, if we have a price feed for, say, pepper in Southeast Asia, we can create a market for that, and people can start trading that. So it's we're
Wow.
not hooked on any one thing. We're trying to make a protocol that you can create a market very quickly and
Yeah.
very cheaply, and
Yeah.
then we can see. I mean, if people don't want to trade it, they don't want to trade it. But if you get a lot of, I mean, I think what's going to end up happening is, you're going to list multiple things, and some things won't attract much attention, but some things will. And so that ability to cheaply and easily try new things is part of what we're trying to accomplish.
So fascinating. My sister and brother-in-law, they own a lot of property, and they have chickens, and they produce a
Mm-hmm.
lot of eggs for, the grocery store market, and
Mm-hmm.
that has been an interesting, just watching them in the agriculture or farming,
Mm-hmm.
mechanism with COVID and the
Yeah, yeah,
market,
yeah.
and feed prices going higher. So it's very interesting when you talk about that with the pepper and just different. I mean, that's looking at like the possibilities.
Mm-hmm.
And that's the exciting part also with this whole technology, this blockchain technology, is the possibilities of what
Right.
we can create, like what you're doing with outcome trading, with creating the derivatives. It's people are being able to create different things within the space that are all solving these huge, massive problems and transferring wealth to us as the people,
Right. Right.
and not big institutional, companies or investors that are always getting funded or,
Yeah, they always seem to
having
do
money
pretty
go those
well. Yeah.
directions. Huh?
Right. They always seem to do pretty well, the really
Oh
large
yeah.
players.
Yeah.
Yeah. And if
Yeah.
you look at the existing market, there has been a huge emphasis on um, huge markets, large markets and large players, right? Rather
Yeah.
than something that's built that can be used by smaller ones. I
Yeah.
really look at, I mean, you look at what happened with cell phone technology in the developing world. They didn't start wiring phones out to, small villages in Africa. These people just jumped, they leapfrogged, they went to cell phones. And I
Right.
think that that's how I look at it. I think that especially with with decentralized finance, some of these areas are going to leapfrog,
Yes.
the centralized solution, and then jump to the decentralized solution. And that's one of the things we're trying to accomplish as well. I mean, it's funny you mentioned the eggs, because I mean the CME where I used to trade was originally the butter and egg board,
Oh
and
wow. Yes.
they used to, I think it was like Thursdays at 10 a.m. You'd hear an announcement and say, any more trading in butter? Any more? Because they trade for like 15 minutes a week. But originally that had been a big thriving market.
Right. I mean, hey, it might be in the coming years, who knows? But
Yeah, absolutely.
the exciting thing is that there's so many different possibilities and so many different doors that can be opened, and things that you figure out may not work really early on. You try and something doesn't work, and you move
You
and you
move on to
fix
it.
it.
Yeah,
So
absolutely.
that's super fascinating. Where do you see the world going in the next 15 to 20 years? In 15 to 20 years, do you see mass adoption with blockchain technology, or do you think we're still further out from that, or do you think the post is a lot sooner than those 15 to 20 years?
I think it's sooner. I mean, I've been a big believer that the dollar was going to have some real problems based on, just the demographics and the way Social Security and Medicare were
Hmm.
built. The government really can't afford these, and so you're going
Yeah.
to either you're going to have to cut benefits, or you're going to have massive taxes, which really wouldn't work, or they're going to print money. So I
Yeah.
always thought, well, at some point there's going to be massive money printing. Well, COVID moved that forward about 5 to 10 years.
Yeah.
And now we're starting to see the problems, right? I mean, they're telling us we're going to have transitory inflation. And it turns out now, no, we're going to have, 9% inflation for a while. And you tell people this a year or two ago, and they're like, hey, whatever. They didn't really believe it, but
Yeah.
now it's with us. And we, just today learned that, oh no, we're redefining recession,
Yeah. No, we're
because we
changing the
don't,
dictionary term. The
we're
dictionary
changing
term
the
is no longer
dictionary,
valued.
right? Right. And, I don't really care whether it's technically a recession or not. I know
Right.
that the average wage in the country after adjusting for inflation is down about 4%. So the unemployment rate hasn't gone up because everyone took a pay cut,
Yeah.
and we all took a pay cut. And
Yeah.
so I look at this, and I just don't think I don't think that the existing centralized systems, I don't think they have legs. I don't think they can survive. There's always a temptation to print, and you see them printing, and I don't know exactly what the timeline is going to be, but when you look at the new things that are being created, and I mean, just Bitcoin alone has created a store of wealth for people that is non-confiscatable, and that people can use. People saying, "Oh, it's not a good inflation hedge," and it's like, well, what's the inflation been over the last 2 years, and what's happened to the price over the last 2 years? I mean, it's not a good inflation hedge for the next week, but for the next 5 years, these things work. And so I think I guess that my incredibly long answer to your simple question was,
no, I love it.
I do think we are going to see a new financial system emerge. I hope we are, because the one that exists doesn't work for ordinary people. A lot of the derivatives system doesn't work for people. It more often than not causes people to blow out and lose money. And the existing financial system, I mean, if you just look at what happened in the last 12 years, where 95% of the increase in income went to the top 1%.
Yes.
I mean, why is that the case? And it's the case because if you're rich, you get access to the money before everyone else. And so you're able to buy the assets before they inflate. So I think we need a more fair system, and a more stable system. And I think that's what's being created, albeit somewhat chaotically at this stage, because we're in the early stages. But I think
the
that's
Wild West for sure.
Right. But you think about the Wild West, and what do we get out of that? We got a prosperous country that did really well over the next 100 years. So this is the early definitely. Ugly stage.
It's ugly and exciting at the same time.
So absolutely.
It's ugly when you play with bad actors or people who are performing rug pulls. And this is what I share with my listeners all the time: is do your due diligence, research projects, because this is a space that some people are, calling for more regulation in. I don't know where I stand on that yet. We know what regulation has done. Right. There's good regulation where we have certain, like things in place where they can't sell poisonous meat in the grocery store because of regulation. But we've also seen regulation go backwards to where it ends up with more governmental control. And then it really offsets the whole decentralized idea where we are building stronger communities, building stronger financial assets for ourselves, transferring wealth to us, not to the 1%, and really being able to create that world. So there is ugly, but there is beautiful in that, meeting beautiful people like you and what you're creating, and your co-founder, and all the amazing other people I've interviewed on the podcast, and the people that are yet to come on. It's just, it's an exciting world where you do get to build a really good community of people who are building quality projects, and not just people trying to gain an extra bucks somewhere. So,
well, I mean, one of the things I can say from going to those meetups in 2014, I talked to people who were trying to create, a derivatives platform. I remember there was a young team that was trying to do it, and they explained it to me, and it didn't make a ton of sense. They were good technologists, but they didn't know the market. I remember saying to them, well, how are you going to get price discovery? And they said, well, what's price discovery? Well, if you talk to people who are in the blockchain space now, they all know what price discovery is. They all know this field has advanced so far in its knowledge. And if you think about people who are in the space, how much they really know about money and financial systems, I mean, it has been a huge educational ride. I mean, I'm used to, coming from a world where, having been on the trading floor, people had no idea what I did. They didn't understand it. I mean, frankly, before we had all this massive amount of printing that kind of started in the late 90s, you may not have needed to know. But now you've gone from that to a world where all kinds of people understand these things, understand these concepts. And I think that has, it's been a side effect of this that has been very positive. And I don't know that it's often recognized just how much education has come out of this.
Oh, absolutely. And how much education is still coming. It's incredible.
Absolutely.
And there's so many different things that are blossoming from this world, from everything that we're experiencing right now. All of the what I feel like there's been a shakeout. We talked about Luna and Celsius. People are really getting shook out during this bear market.
Yeah.
And now we're getting to see who the real people are. Like,
right.
Because they're all getting dying away with that. And so it's actually a good thing, the chaos you mentioned. It's actually a really good thing that we are having the chaos, because we are building something of quality that's going to be able to withstand the times.
Right.
So
Yeah, it's not going to be easy to rebuild a Luna right now. I mean,
No.
you're not going to get the funding, or, well, maybe you get the funding. You're not going to get the buy-in from the public.
Well, they're experiencing that right now with what
Right.
Luna do.
Right. Absolutely.
Yeah, it's definitely not hitting those highs that they hit, with Luna 1.
Oh, absolutely not.
So,
yeah.
I just had a interesting, or not an interesting question. It's my own, I'm like, you went to those Ethereum meetups in 2014. What was the catalyst? So here you were, San Francisco. I think it was in San Francisco.
Yeah.
The ending point where you ended up, and then you started. What got you to those meetups? Were you just looking online, like wanting to meet friends in San Francisco? You're in a new city. Like, how did you get to an Ethereum meetup?
Yeah, it's a good question. I mean, I had left the last startup. I mean, and when there are people who walk away with a lot of money, and then they can go, I mean, I don't really golf, but if they can go play golf, but or you need a job and then you jump to the next job. I was kind of in between, right? So I had some resources. I didn't need to do anything right that minute. And so I thought it was really interesting to learn about something new, right? I wanted to go learn about a new field and see what I could potentially bring to it. I mean, when I first, I remember first learning about Bitcoin, and at a time when I was working like 12 hours a day, I'm like, yeah, I don't care. I don't need to know about this. But then when I, finally broke down and started learning some things about this space. And I think what was interesting too with Ethereum was the idea that you could have these automatically executing contracts, right? I mean, that, you don't have to go into a court and try to get them to hold up the contract. It actually executes automatically. It seemed like an incredibly promising area. So, and then again, when I first learned about Bitcoin, the idea of something that the government can't come in and confiscate. And you think about how many times in world history there've been a group of people somewhere that the government's starting to become unfriendly towards. And do you want to flee the country with leaving behind everything you own? And here's something portable, unconfiscatable. I mean, this is a huge improvement in human life that is being created. And so I thought, well, what can I learn about it? What can I contribute to it? And that took a few years to figure out. I mean, I'm not a technologist. If I were coding this, people should run away. I'm not the guy who can do that, but I do know a little bit about markets, and have been able to come up with some creative ideas over the course of my career. And so then meeting my business partner, and then one of our partners who's working with us and developing the actual code, getting a team that can help build this. Here's the contribution that we can make, and hopefully, it can be helpful to people, and hopefully we'll do okay ourselves. That would be nice.
Absolutely.
And so that's kind of how I ended up, I guess, working my way into it, because it seemed like someplace where you could make a difference, and you could, you could do something interesting.
It's so, thank you for that. Thank you for sharing that piece, because I feel the same. Exactly. Like contributing and being able to do good.
Right.
To me, that's where blockchain is working towards right now. And it's actually like starting to, those things are starting to happen with the smart contracts, with real estate, with, every different facet. Blockchain is definitely doing some massive change in the world, making some massive moves. So thank you so much, Pete. Is there anything, before we wrap up, is there anything you feel like I might have missed that you want to talk about?
I think you've covered a lot. I mean, I think I just, and I'm sure you're probably getting to this, but it's like where, people can go for more info. Is there other?
Yes, exactly. So I want to know where people can find out more info about you, but more importantly, also how they can access outcome trading, where they can find it, all of those things, which I will put in the show notes as well. So feel free, you don't need to spell out links. I'll attach all of that for everybody.
Well, I'll spell out one, which is outcometrading.org, which is just our main website. If you go to YouTube and just search Outcome Trading, we have our own a few videos up there now, like a very short demo and then a little bit longer demo with some Q&A. We did an AMA on Telegram, which was not extraordinarily highly attended, but we did record, so at least people can get an idea. So again, if you go to YouTube and just look up Outcome Trading or Outcome Trading Foundation, and you can find out about that. And then we have like a Telegram channel, which is Outcome Trading Group. So, and then, obviously the nice thing about Telegram is it can reach us. And then there's like an email link on the website as well. So we'd love to have people come and take a look at what information we have out there and ask us as hard a question as you can come up with.
Definitely. And is Outcome Trading, is the software complete, or is it in production right now and it's coming out in the next couple months, or where are we at with Outcome Trading?
Right. We're in production, but we're pretty advanced. It's pretty far along right now.
Okay.
So we expect, I think we anticipate bringing up something that you can, maybe play with, and then we'll probably run a contest where you can trade, and whoever does well can win in that contest as we develop our way towards, and I think even in the first incarnation, there may be a little bit more centralization than we really want, but we are working our way. People say, are you decentralized? We say we're decentralizing. We're working our way towards getting more and more decentralized as we go. And, but the reality is we are in the stage we are in, which is advanced and very close, but not quite out there yet.
That's perfect. There are truly a lot of people like you out there that are currently decentralizing. And so they have the end goal in mind to be decentralized, with D at the end. But we got to start with what tools and resources we have at this moment, and where people are with their education around decentralization. Right. And so it's important to kind of, you got to bridge the gap between where we're currently at and where we're headed. And you're doing that. So kudos to you.
We're trying. Absolutely.
You are. Yeah. You're doing great, Pete. It's been amazing having this conversation with you. It's been fun. I've learned a lot myself. Mm-hmm. And if any of you heard some terminology that Pete might have said that you're not familiar with, I do have a Words of Web3 that can be downloaded in the show notes that will help you really work through this terminology, because there is a lot of new terms in this space that you can learn about. So thank you so much, Pete. We are going to put all the links, everything you've just mentioned in the show notes as well for people to check out and connect with and get in on this Outcome Trading when it launches, and be a part of the whole movement as we decentralize. Yeah. Awesome.
Well, thank you for having me on. Really appreciate it. And I've looked at your podcast. I really appreciate the educational effort that you're making. I think it's a great thing, and I appreciate it. Thanks for having me on.
Absolutely. Thank you. You made it. Congratulations. That wasn't so bad, was it? I hope you laughed and learned a little bit more about this Web3 universe and how simple and fun it can really be. Would you be so kind as to leave us a review and share it with your friends and family? It would mean so much to get this out to more people as we embark on the greatest transfer of wealth that has ever happened in human history. Can't wait to see you on the next one.